Let's welcome in our morning guest at this moment. Avinash Gurashkar is now joining us. T.S. Harihar is with us. Manas Jaiswal as well as Amar Singh are also joining us this morning. Mr. Harihar, let's start with you. What is your call on the markets first? The sell-off that we saw yesterday, you think markets have now made a top in the near term?
No, I don't think so, Pankaj. I think yesterday's sell-off in the second half was largely a reaction to what happened both in France and in UK. I think UK, the markets cracked quite sharply yesterday after it became clear that there will be a snap general elections around the 8th of June. And France has always had the worry that with the forthcoming election, Marine Le Pen, who's the extreme right candidate, could actually be a very strong candidate for the president. So I think there are some worries in Europe, and that took the European markets down. So I think yesterday's fall in the second half was more a reaction to what happened in Europe, and I wouldn't read too much into it. So I think probably the market is likely to still be stable in the range of about 9,000 on the downside, 9,250 in the upside. I don't see any compelling reason for the market to get out of this range at this point of time.
Right. What are your top picks?
Well, again, I have two on the long side and one on the short side. On the long side, the first one continues to be my old favorite, Kotak, especially after the recent organic move as far as expansions are concerned. So we are looking at a target of about 1,050, 1,100 as far as Kotak is concerned. The second stock we like is HPCL, which has already been an outperformer over the last probably 1.5 to 2 years. And with the dynamic pricing coming into oil products, I think HPCL still has a long way to go. So we have a target of about 650 as far as Hindustan Petroleum is concerned. The last one, of course, I stay short on ICICI Bank, and I think this quarter is going to be another major disappointment for ICICI. And I think the markets should now start valuing the stock much lower. So we have a target of over 225, 230 as far as ICICI Bank is concerned. 230? Yeah. So you expect the Q4 numbers to be weak? We expect it to be very disappointing. But does that mean that Yes Bank and IndusInd will also, follow the trend? They are also a big part of the banking system, or they'll continue to do what they are doing? No, our worry on the asset quality side is more on ICICI Bank and Axis Bank, and not so much on either Yes, Kotak, IndusInd, or even HDFC Bank. So basically, it's a bank-specific issue. It's a bank-specific issue. You're right. Right. Avinash, what are your calls?
Yeah, good morning, Pankaj. We have three calls. The first one is on Finolex Industries. We had the IMD giving the monsoon forecast yesterday, and we believe from the agri space, Finolex Industries can be a good opportunity to accumulate at the current level. We have a target of around 650 over the next 12 to 15 months. The next stock is NBCC. We believe that within the PSU space, this PSU has got a very strong balance sheet, virtually no debt on the books, and healthy cash plus a very strong order book of almost 75-80,000 crores. The affordable housing segment is also going to open a lot of opportunities for the company. We expect that year we could look at a target price of around 202, 206 over the next 12 months. And finally, from the housing finance space, Pankaj, we like Diwan Housing Finance. Looking at the kind of numbers Group Finance has thrown, our sense is that even Diwan Housing should show very strong numbers, not only in the quarter 4, but even in FY18, loan book growth as well as asset disbursement should be pretty strong. And plus, NIMs have been quite reasonable and valuations are attractive. So here we have a target price of around 460.
All right. So remain positive on Diwan Housing Finance. Amar, what are your top picks for the day?
Yeah, very good morning. The first is a buy on UPL. Overall, what we are seeing in UPL is that in spite of a major sell-off happening in the markets yesterday, UPL stood its ground, and technically speaking, it's very strong across all time frames, trading at record highs. So UPL can be a buy. Any dip towards 748, 750 can be a buying opportunity with a stop loss of 729 and a target of 785. The next stock in focus is IOC. What we're seeing in IOC is that IOC is also holding its ground, and yesterday also it was overall a positive day. And talking about technically about the stock still remains strong across all time frames. And once it breached its 385 level, it has rallied by almost 15%. So overall, since the trend remains positive, so any pullback towards 422, 424 can be used as a buying opportunity in IOC with a stop loss of 414 and a target of 444. And the third stock to look at is Just Dial. Just Dial is a sell. Basically, it has been in a sell-off mode since 17th March when it touched a high of 619. So it's corrected by almost 20%, but overall the trend still remains weak. So any pullback towards 505, 510 levels can be used as a shorting opportunity in just dial with a stop loss of 522 and a target of 482.
All right, three picks coming in from Amar. Manas, good morning. What are your top picks?
Good morning. I have 3 sell recommendations because I am expecting almost 100 points correction on Nifty. So I have 3 sell recommendations. First is sell on Ashok Leyland, where stock broke the support of 82 yesterday with higher volume. So I am expecting further downside. Now stock can test 78.50, so one can go short with the stop loss of 83.10. Second call is a sell call on Reliance Capital, where the stock was facing a lot of resistance near to 620, 630 for last 3-4 weeks time, and yesterday it fell sharply, broke the support of 606 on the intraday chart. So we may see further downside. Possibility is high that stock can test its 50-day moving average, which is placed near to 563. So here one can go short with a stop loss of 620. And last one is a sell call on Tata Steel, because most of the metal stocks are looking weak on the charts. Few days back, Tata Steel broke its 50-day moving, yesterday it broke its 100-day moving average also with higher volumes. So now it can test its 200-day moving average. So at least you can set the target of 430. So one can go short with a stop loss of 461.
Right. TCS will be a stock that will be in focus. Of course, what Anisha told about the visa norms in US, that will also have an impact. But apart from that, the numbers is what it will react to. This is the pre-open session already indicating a 2% decline. Sales numbers came in at 29,642 crores. It was expected to grow marginally, but there was a marginal bit of disappointment. The profit numbers was expected at 6,640 odd crores. So it came in at around 6,600 crores. So that's fine. That's not a big number in terms of disappointment. Dollar revenues came in at $4.45 billion. It was expected at $4.47 to $8 billion, so slightly on the lower side. And the EBIT came in at 7,600 odd crores. So that was the EBIT number. As far as revenues are concerned, 1.5% growth for dollar revenue growth. The constant currency one was slightly disappointing, 1% number. Rupee revenue, of course, was also a marginal bit of disappointment. Volume growth came in at 1.7 odd %. EBIT margins came in at 25.7. The poll that we conducted expected 25.9% in terms of numbers. And the key disappointment or the key surprise element was that BFSI revenues, which have not declined for a while, actually went down 0.4 odd %. Remember, it's one of the largest chunk of TCS in terms of revenue, and that's why it's important. What did the management say about the outlook? Of course, they don't give a very concrete outlook like Infosys or a very quantitative outlook. But what the management said is that their EBIT margin target at 26 to 28% is maintained. They are not changed. They don't see any reason to change that at this point of time. Incrementally, they expect FY18 to be a positive year. They expect financial services, the BFSI segment that we just told you, they expect it to bounce back in FY18, and they see strong deal momentum in financial services that will lead to this movement. Most of the brokerages have not changed their call, not changed much in terms of their target price. Yes, there is an EPS movement of about 2 to 3 odd % here and there, but UBS maintains its buy. 2,800 is the target price. CLSA also is a buy. Their target price is 3,000. For Kotak, the target price is 2,405, and Credit Suisse maintains its neutral, and their target price is just in and around where the stock is. Citi maintains its sell, target price of about 2,140 odd level. Mr. Harihar, what do you think about TCS? Do you think that any correction is a buying opportunity?
Pankaj, I would believe so, because when I looked at the results, forget about the BFSI part of it. What I was really impressed is that their digital revenues actually were up by about 29%. Now, I think digital, if you recollect, last month it was already accounting for about 17% of the total revenues of TCS. So 29% growth on that, I think, amounts to quite a bit. And today, I think in the entire IT space, the large cap IT space, there is no company other than TCS which has such a large exposure as far as the digital is concerned. And that's the big growth area. So I would actually not be very worried about the TCS results. I think the margin contraction is just about 50 or 40 basis points, which is not really substantial. So I would believe that if you get a dip to about 2,200, 2,150, it would be a good opportunity, but don't expect fireworks in the short term. I would believe from a 1-year perspective, it seems to be a good buy.
All right, so positive on TCS from a one-year perspective. Now today banks will also be in focus after the RBI came out with a circular coming out with new guidelines for provisioning. Now the RBI has told banks to consider raising provisioning, especially given the exposure that banks have to stressed sectors. The RBI has suggested raising provisioning for stressed sectors, and they have recommended to even increase the provisioning for standard assets as a precaution. They have put a board-approved policy for making provisions. There should be a policy in place. This is what the RBI is saying. They also say that the policy should be on higher provisioning for standard assets than regulatory minimum. The banks should review policy at least on a quarterly basis, and the current provisioning for standard assets is at 0.4%. Now, especially on the telecom sector, the RBI raised some red flags. The RBI warned banks on exposure to the telecom sector. The RBI said subject the exposure to telecom to closer monitoring. They are saying that moves as telecom sector is reporting stressful financial conditions, and the interest coverage ratio for telecom is less than 1. The RBI suggested reviewing the telecom sector latest by June 30th, 2017. So this is definitely going to have an impact on banks. I think these guidelines came out after the AQ4 that the RBI carried out, and the RBI is saying that what the banks think is good enough provisioning to cover some of the stressed assets is perhaps not good enough.
Right, Anisha, NALCO will be in focus. So just a couple of days back, you got news flow regarding divestment, which are the 7 big companies where OFS is likely to happen, and you've got a news flow on NALCO, where there is a 10%, entire OFS today. So there's a 5% divestment of NALCO with a 5% green shoe option. What does green shoe option mean? If the 5% demand is met and there is an additional demand, they are willing to sell to another 5%, which means it's a 10% open offer, which comes up for sale. In terms of the total price or the total amount that the government is likely to take, so 1,350 crores is what the government is expected to buy from this, get from this stake sale, and it comes in at an attractive discount. So 67 rupees, the current price, as you can see at the bottom of your screen, is 73.45, but I think that price will adjust to 67. So that discount is something which the street would have already factored in. Plus there'll be the entire metal pack, which will be in focus. Metal stocks globally saw a big decline overnight. Names like Singh, names like iron ore on the LME fell quite a bit, so that will definitely have an impact. Maybe a little bit of it would have happened yesterday during our closing hours, but still, at least there would not be any major movement on the positive side on those names. And IndusInd Bank and Yes Bank, both these companies declare numbers, so all of them should be in focus. Real estate companies have been in focus. Yesterday in the second half, there was a sell-off. In the pre-open session, again today, it's indicating that it's likely to see a further decline. Let's see what the opening is. We should start getting opening prices anytime soon now. Let's just look at what the levels are and what essentially is expected. So absolutely flat in terms of opening, broadly in line with what expectations were. 7 points on the higher side for Nifty, and Sensex about 33 points higher. Asian Paints on your screen is up around 2 to 3 odd rupees. Aurobindo Pharma is on the positive side. Cipla, ACC, Dr. Reddy's are some of the other gainers. That's TCS for you, 2% decline, 2258. That's broadly in line with what the expectations was in terms of EPS cut. So 2% was the EPS cut on the street, and that's precisely what you have seen. But again, numbers were soft, but at the same time, nobody was expecting any major green shoots also to come in from these numbers. NALCO is down 5%, so 67 rupees. The OFS starts today. 4.5 rupees decline. 2.5 lakh shares already traded for NALCO, so that's the one which is going down today, down about 6% at this point of time. Let's look at some of the other results reactions. So Hindustan Oil Exploration, numbers on the face of it looking pretty good. 3% higher, 86-87 odd for HOEC. So that's a name which is doing well right now. VST Industries, numbers were good, but numbers were slightly below. But there are no volumes. It's just about 203, 204 odd shares. So it's not much that one is looking at in terms of volumes. That's ABB India. There was one order that they got. and that's up around 1.4, 1.5. But again, just 1,000 shares traded, so not much that one can read into that. Z, again, a small bit of news flow regarding one acquisition. They have completed that, so that's about 14,000, 15,000 shares traded, and that's about 519 for Z Entertainment. Let's look at some of the other Nifty 200 movers as well and what's happening. So if I look at the top gainer, BEL is the top gainer. It's up 2%. UPL was up yesterday as well. It's up another 2% right now. And NBCC is also doing well. These are some of the top gainers on the 200 pack name. Nalco is down 6%. Oracle Financial Services, that's an ex-dividend of about 170 odd rupees today. So that's down about 2 odd percent. Adani Enterprise, it went up some 20% yesterday. It's down by about 2 odd percent today as well. Anisha, any other names that you can pick up?
Yes, loads today, Pankaj. The real estate space, Indiabulls real estate itself had seen such a U-turn in trade a day earlier. Today it's amongst the biggest losers. So it's down nearly 8%. Then we also have cuts coming in HTIL, which is down 2.5%. So some of these real estate stocks now seem out of favor and are seeing profit taking. You mentioned Nalco. Adani Enterprises saw a blowout move a day earlier. Today it's down 3.5%. TCS is amongst the big losers, and amongst the banks, we are seeing IDFC Bank, IDBI Bank seeing some profit taking. REC is down about 1%, and some amongst the metal names, Tata Steel remains weak and is down about 1%. On the gaining side, all hotel stocks are buzzing a day earlier, and the up move continues for a number of hotel stocks. We have Kamath Hotels up 5%. Hotel Leela has now reversed. In the initial part of the day, it had moved up higher. And some of these hotel stocks remain in focus. Jyoti Structures has seen a huge move a day earlier, and that one is continuing with its up move. And we are seeing even Idea Cellular in the green at this point of time. I wanted to come to you, Mr. Harihar, and talk to you about banks and the impact of higher provisioning. What could it be when it comes to profitability for some of the banks, both private and public? Who do you think will be affected more? How would you then approach the banking stocks?
See, what we understand, Anisha, is that the total exposure of the banking system to telecom is about $64 or $65 billion, now, which is quite substantial. And, you know, according to the last RBI report, it's among the top 3 sectors as far as the banking stress is concerned. And I think you rightly pointed out that the interest coverage, which is the ratio of EBIT to interest payout, is less than 1, which is financially not a very healthy scenario. And in terms of exposure, it is actually the PSU banks and select a few private banks which have a major exposure to telecom. So I think definitely there will be price pressure as far as these companies are concerned. But the bigger worry, according to me, would be for the telecom companies, because this higher provisioning would mean that banks would be a little more skeptical about funding them. And that could be the bigger worry as far as telecom companies are concerned. So I think more than banks, my worry is that telecom companies could actually see some negative headwinds because of this news.
All right. So telecom companies could also be in focus because of this. Avinash, what do you make of all the buzz surrounding some of the hotel stocks like Hotel Leela? That was buzzing a day earlier. There is some buzz that they're looking to perhaps offload the Delhi property, which is in Chanakyapuri. What would you do with some of these stocks?
I think as far as hotel companies are concerned, I think the buzz is largely because of the fact that, I think the rupee has appreciated, and in terms of the currency move, possibly the coming quarter could be beneficial to them. I would sense that, in case of Hotel Leela, in case the Delhi property is up for sale, it could obviously help them, reduce their debt on the balance sheet. They've already reduced their debt, by hiving off some earlier properties. So I think clearly, it's a low price share. So these kind of news flows would obviously give a big boost to the stock price. But I think overall, on a fundamental basis, it still remains to be seen at the EBITDA level and at the interest servicing level, how the company manages its debt. Because I think what we have seen is the debt on the balance sheet is still very large. And therefore, I would not be surprised that this can be just a momentum move. It may not be sustained. I think overall, the other traveling companies like Thomas Cook, Cox and Kings, these are also companies which should do well. If the overall travel pack does well, then these are companies which are obviously well managed and where the earnings visibility is much better.
Right. Amar, you had mentioned UPL, that one is doing very well, up to 2.5%. Do you have a view on stocks like Bharat Electronics and Den Networks? Then Networks saw a very large move a day earlier, and for this week itself it's up 8%. What are the levels you're watching for these two counters?
Yeah, overall, looking at Bharat Electronics, it's the overall trend definitely is very strong for Bharat Electronics. It's again up. It was consolidating around 170 levels, and then it's rallied and currently around 180. So clearly, since the trend, I would say the short-term trend as well as the medium-term as well as the long-term trend, they are all positive, and there's no sign of, I would say, that the trend weakening or some sort of consolidation. It did consolidate for the last few days, but again it has taken off sharply today. So I would say that as I speak, it's witnessing a further rally. So at this level, I would not suggest a buy, because a buy level ideally would be around 175, 176, some correction, because a major support level or technically the stop has to be below 170. But yes, the trend for this stock, those who are long in the stock, they should definitely hold with a stop loss of, if they are long term, they could hold with a stop loss of 168, 170.
Mr. Harihar, what will be your call on Bharat Electronics? You think that increasingly the execution over there is increasing, which the street, of course, has been waiting for in defense for the last 2-3 years?
No, I think a couple of things have been changing for Bharat Electronics. Firstly, I think their order book position has been quite robust in the last few months, and that is probably reflecting as far as the stock is concerned. But I think very importantly, what the street is expecting is that BEL could probably be a first case study where the government may actually give up total control of a defense-related PSU company and actually privatize it. So I think that is probably what is holding up the valuations of BEL so much. And I think if that happens and the government gives a kind of a signal which is already done, I would believe that this stock could actually have a lot more of room left to go upwards.
Right, but say if that happens, it will happen at a premium, you think?
Well, it will depend largely on the market conditions, but I would believe that the government would not be too keen to give up control without a premium. So, yes, definitely, I think the government would be looking at a premium. And the way the stock price is moved, I think from about 150 to about 180, it clearly indicates that there is something cooking in the counter which is likely to be announced probably in the next few days or weeks.
Right. Avinash, any call on IRB infrastructure? It was up 5% yesterday. It's up another 2% today. Talks that, investor may be raised and that can reduce the cost of funding for these infrastructure companies.
Yeah, I think, Pankaj, in most of these road companies, I think they have been waiting for the, regulatory hurdle for the InvIT instrument. And I think there have been some news reports floating around that possibly on the regulatory side now these clearances have gone ahead, and I think IRB could possibly be one of the first companies to raise money under this new instrument. Our sense is that looking at the kind of order book and the kind of momentum in the road sector, definitely IRB should benefit significantly, and I think cost of funding, as you rightly mentioned, could come down. They could unlock certain value of their assets in a separate company through a SPV and then through the InvIT instrument option. So I think clearly that has been the main reason the stock has been in the momentum in the short term. Even from a longer term perspective, the road building activity and the toll activity, I think, should definitely benefit IRB.
Right, but do you think that these new products which come in, they don't get investor attraction so much? So do you think that only when it happens, markets would start to price in cost of funding coming down?
Yeah, because I think this is a product which is definitely a large ticket kind of product instrument, and I don't think it would be targeted at the pure retail investors. It would possibly be targeted at initially the institutions, the banks, and maybe some HNI. So I mean, obviously, once the market gets a hint as to how this instrument will work, how the cost of funding will come down, after that you will see a gradual re-rating in this counter.
Right, Manas, what's your call on IRB?
See, yesterday definitely it gave a breakout above 400, 200, 250, but it could not sustain on higher levels. Still, the trend is positive. Stock is trading above 50-day moving average. So I think if you are holding the stock, then definitely you can hold it, but keep the strict stop loss below 235. But if you want to take fresh long, then I think you should wait. If it breaks 255, then you can take a long call, because if it breaks 255, then it can test 285, 290 soon.
Right. What will be your call on JSPL? Now, that's a stock which went up earlier, but now that prices are coming down, I'm talking about LME prices, even that is seeing a correction.
See, most of the metal stocks are looking weak on the charts. Generally, steel and power is making lower tops and lower bottoms on the intraday chart for last 7-8 trading sessions. Now it is trading near to its 50-day moving average, which is placed near to 114. Looking at the pattern, I think it can break 50-day moving average and it can test its 100-day moving average in next 1 or 2 weeks time, which is placed near to 104, 103. So I am still bearish on most of the metal stocks. Jindal Steel can test 104. So here one can take a short call and keep the stop loss above 121.
Right. Your call on IRBL, India Bull Real Estate?
See, India Bull Real Estate, if you are already long, then you can hold it, because on the charts, the medium-term outlook is still positive. You can expect the target of 160 to 170 in next 1 or 2 months' time. So if you're already long, then you can hold it. But if you want to take fresh long, then either on a breakout above 132 or on decline near to 110, you can take a chance.
Okay. Avinash, what do you make of the move that we saw across the Adani packet earlier? Adani Enterprises volumes were so high. We haven't seen these volumes the last 7 years. Adani Ports, Adani Power, all of them rallied a lot. What do you make of this move? What's your view on all these stocks?
I think, from the Adani pack, I think Adani Ports looks to be well positioned. I think from the infra kind of, segment, I think Adani Ports definitely presents a very good opportunity. Adani Power, I would be a little skeptical, because in terms of pricing and in terms of the debt on the balance sheet, it still remains to be seen how the company will be coming out of losses. And in terms of the, the regulatory kind of hurdle which we saw recently, I think some amount of repricing on certain projects has to be done to ensure that those projects, the ROI gets recovered. So I would believe that, I think Adani Enterprises is purely a trading play, and clearly, now just does not generate any manufacturing kind of income. But I think Adani Ports seems to be a lot better amongst all these three companies. So I would believe that any weakness in Adani Ports can be used as a good long-term opportunity. But Adani Power should be avoided, and Adani Enterprises can be held on.
Okay, you can hold on to Adani Enterprises. Today, we are seeing some weakness in housing finance names, Indiabulls Housing Finance, even HDFC. Mr. Harihar, do you think these dips are good entry points for these stocks? Valuations for some of the housing finance companies are rich. What would you do if presented with such kind of an entry point?
No, I think there's a lot of sentimental fervor in favor of these housing finance companies, and I would urge investors to separate the wheat from the chaff, because it's very difficult to say what is a quality housing finance company and what is not. For example, if you want to play the game of let us say low-cost housing, I think a stock like Ashiana Housing would be a very good play, but then it's not exactly a very large play comparable to the others. But if you ask me quality housing finance companies, I think you can really count them on your fingers. It's probably LIC Housing Finance, Diwan Housing Finance. I think these are the stocks which have real quality stories to relate. And these are the stocks I think one should be buying from a long-term perspective.
All right, you can look at some of those names from a long-term perspective. Amar, we've got the prediction from the Met Department of a normal monsoon. On the charts, you like UPL. Any other names? What do you make of the move we saw in Escorts? That has moved well, but M&M is still being amongst the auto stocks struggling. What would you do with these two counters, Escorts and M&M?
Yeah, looking at Escorts, we've seen a significant rally from almost, it's more than double from 250, it's currently around 550. And now it's showing, I would say, some profit booking, and also technically it's not going to see a significant rally from the current level. So it's a good time for those who are long in Escorts to book profits, because upside I see around 560, 565, that definitely looks capped in the short term, and prices could further, if they breach the short term 535, 540 levels on the downside, we could see it come to as low as 520. So Escorts is clearly in a trading range as I see right now. And looking at M&M, I would say it's again a sideways play. And technically speaking, Escorts is still stronger as compared to M&M, because M&M I see even on the medium term as well as the long term charts as well as the short term charts, it's clearly sideways. So I would not suggest much of action on the M&M, because on the downside, short term support is around 1240 levels, and but on the upside 1280, 1290 is capped. So I would say that Escorts is still a better buy if it witnesses some correction towards 525, 530 levels.
Right. Manas, do you have a view on REC PFC? Do you think this most recent correction is offering a buying opportunity?
No, I think if you're traded, then I think you should wait, because you may see some more correction, because we have already witnessed a smart rally from the level of 120 to 220 in REC, and now it can correct to near to 180, 170. So this is a correction phase. So I think you should wait for some more time on correction near to 180, 170. Definitely, you can take a long call for next 2 to 3 months time, because the medium-term outlook is still positive, and you can again see the price 230. So on correction near to 180, 170, you can take a long call.
Right. Avinash, do you have a view on Aurobindo Pharma and Sun Pharma? They're quite contrasting. Both stocks have come under pressure, but Aurobindo is trying hard to recover, while Sun seems to be losing its way. Your view on these two counters?
I think given a choice, I think Aurobindo Pharma looks definitely much better than Sun Pharma. In fact, Sun Pharma has now again got roughly 11 observations for its Dadra facility, and I think that is something the markets were clearly disappointed. I would believe that at the current valuations, Aurobindo Pharma, if one were to take a slightly longer term call, definitely seems to be well positioned. I would definitely be a buyer in this counter if one takes a longer term perspective. As far as Sun is concerned, I would believe that it's better to wait and watch for some further developments, whether these 11 observations in Dadra are really critical, because the markets are now looking at the fact that if further negative surprises come in from these observations, it could actually result in a short term kind of loss of momentum in this counter. So Aurobindo Pharma should be a hold, but Sun Pharma at the moment should be avoided.
Right. Avinash, Harihar, thank you so much for taking out time for us. Manas also, thank you so much for joining us this morning. Just before we go, gentlemen, Harihar, let's start with you. Any disclosures?
Yeah, I think of the stocks I discussed, Kotak is a stock where I have a personal position, but the other stocks we can safely assume that we have recommended to our clients.
Avinash, for you?
Pankaj, whichever stocks we recommended today, it could be safe to assume that our clients have been recommended the same stocks. I don't have any personal positions.
Manas, for you?
No personal holding in these stocks, but we have recommended these stocks to our clients.
Amar, disclosures?
Yeah, personally, I don't hold any positions, but yes, our clients could be holding positions in these stocks.
Thank you so much, gentlemen, for taking out time for us.